Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, September 24th, 2021. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame. One thing you'll notice right here, we have our FOMC key level from July 28th, and we just got our recent FOMC key level here on September 22nd. And the newest one is exactly 1 point below the last one about 6-7 weeks ago. 43.8675 versus 43.8575. The 1 point difference from last time. So far, last time it was bid, it returned to become support, it was bid, it returned again as a target, and now being bid again on the newest level. So that's the key level to watch, obviously, in the near term here. We also have ourselves a new key range. That impulse sell-off followed by the bounce that we've seen here recently to 2163, that's the midpoint, so 44.21s. We now have ourselves a new key range. The impulse sell-off of this month followed by the bounce back gives us this new key range to work off of moving forward, and it gives us a new target to identify as the ultimate 100% target here for at least this pattern, and that's 48.05. So at some point down the road, 48.05 could be the major upside target. As we know, when you look at a key range low like this and a good impulse move, you tend to see perhaps some build out. At some point we may come down here and test the key range low. That might offer the best entry for a return all the way to 4,800 from a medium term perspective. So we could be looking at, for example, 4,200 to 4,800 down the road over the course of, say, Q4. So right now, great impulse move down. We're seeing a fade after trend day at the moment, but we're inside this range with an upward bias overall. We'll see again how this range continues to develop in the near term. From the short term perspective, price not only got a fade back into the previous session's midpoint, but is now trading below that midpoint of 44.20. So if bulls want to come back into play here, got to get back above 44.20. Otherwise, we could be looking at a rotation back to the 43.85s. Taking a look now at the NQ. You'll see here the NQ developed a new FOMC key level on Wednesday at 15.135. The last one here from July, a little bit lower, 14.973 half. Again, you can kind of draw this out over here and see how price has responded to that level lately. Recently, we've seen a push away from this zone. The key level, again, we've talked about 15.2. It's kind of still kind of hanging around that area right now. But you can see kind of back here, we have this market structure. It became a lower market structure, and then it was creating lower market structure again until we broke higher yesterday. This is an important zone right here. Can it get back above 15.4 and start marking back up? Or is this a larger lower high that could lead to the edge? We still haven't reached the previous month's low. We still have the previous quarter's high and close down below, which have been sticky levels throughout the quarter. Do we need to come down here and grab some of that before we can move higher? Right now, at the center of the range here, trading around that 15.2 level. That's been a key level there. Still upward trending overall. Still expecting this to resolve itself to the upside down the road, but do we need a double kind of test of these lows? Do we need to come in here to this major CLVN first at the bottom of the quarterly pivots beginning in October? So those are a couple things we're going to take with us here heading into the new month ahead and the new quarter. If we take a look here at crude oil, just from an intraday perspective here, crude oil has hit the previous quarter's close finally and is now trading in a narrow range after that rejection. The rejection that occurred last night, it pushed beyond that level last night and pulled back. That's a very strong intraday key range. That's the key range to watch right now. Price has just tested the key range low at the RTH open, so we'll see how price plays off of that level. But that impulse move, very important here. At 73.66 is the high. You have the low here at 72.97, and from there you get yourself extensions. But the idea here was if price can pull back to 70 and hold we could be looking at a continuation into the blue dotted line to the blue line, somewhere in that zone. And we've gotten the bottom end of that area after holding 70. It appears we were about to give up 70 on this day right here, and at the very end of the day a rally came into play to save 70. Otherwise 67 was the next target below, but it held that market structure and back up we go. So very good move here overall. Keep an eye on the intraday key range for intraday directional price action. If we take a look here at gold now, gold down about 1/3%, and this is the retest after trend day. So in the previous session, fairly bearish selling pressure. We've seen nothing but strength in overnight trading here today, but price has pushed back off of the previous session's midpoint. 1757.30 is that midpoint, rejected off of that area here recently and has sold off over the last hour to 2 hours. So right now looking fairly weak. Again, the 1760 level remains the key level. If you want to go down to 1750 or so, that can be in play as well, and we're below that zone as well. So by giving that up, you're seeing very clear downward sloping price action, lower highs, lower lows. Right now we just hit a lower low yesterday. We could be looking at a move that takes us all the way back to 1675, which is the next major support level below. Obviously 1720 would be kind of an intermediate zone there with FOMC key levels. So right now still showing weakness unless it can get back above 1760 soon. That's it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.